70 years ago, the United States tax code looked something like this. Today, when you include all of its provisions, regulations, and explanations, it looks more like this. Our tax code has gotten long. Really long. It's confusing and cumbersome, which makes doing taxes more expensive and time-consuming for individuals and businesses. But its problems go deeper than that. The tax code is riddled with these things called tax expenditures, or tax breaks. These include loopholes, deductions, exemptions, credits, and preferential rates. Because tax breaks provide financial assistance to specific activities and groups, many are actually a lot like government spending in disguise. Some of the most expensive tax expenditures are also the most popular. For example, if you have a job with health benefits, this provision excludes those benefits from taxation. This one is similar, but for retirement plans, including 401ks and IRAs. Investment earnings from capital gains and dividends enjoy a special lower rate. State and local taxes can be deducted from taxable income. And if you own a home, you get a tax break on your mortgage. And then there are more than 100 additional individual income tax breaks, many you probably haven't heard of, that add up to $500 billion a year. Tax expenditures can influence how we work, save, spend, and invest, which is often the point. But they have an uneven impact. For example, they tend to benefit people with higher incomes who itemize their taxes. With corporate tax breaks, you have a similar problem. Some industries benefit while others don't. It's unfair, but it also distorts the market and hurts the economy. So how much do all of these tax breaks cost us? If you add them all up, including corporate tax expenditures, you get a whopping $1.4 trillion per year. That's almost as much as all the income taxes the federal government actually collects each year. So we give up almost as much as we take in. To put this in further perspective, tax breaks dwarf spending on Medicare, national defense, or Social Security every year. Most Americans agree our tax code is a big problem, but what can we do about it? Many economists believe it would help the economy to do away with some or all of these tax breaks, and in return, we could lower marginal tax rates and reduce the deficit. Here's a look at how that might work. Removing tax breaks would result in more revenue coming into the federal government. That new revenue could be used both to reduce marginal tax rates and to reduce the federal deficit. So while tax breaks would go away, marginal tax rates could go down. And some revenue could also be used to reduce our long-term debt. So the end result would be a simpler, shorter tax code that is more predictable and more fair. We'd have fewer tax breaks but lower marginal tax rates. We'd help the economy, and we'd be able to reduce the national debt. While comprehensive tax reform is not a simple task, the good news is that many promising solutions exist. You can learn more and join the discussion by checking out the links below.